Hey guys, how are you? Vladimir here. This video is the weekly preparation and the first live analysis and market setups for the week. And I record this video instead of the live trading room I hold on Monday, simply because I would not be available on this Monday. So I want to make sure we have the list, we have the setups, and we know what to follow. Before we begin, just a quick one. This is our trading report, and you receive it after the live trading rooms normally. But for those of you who watched that for the first time, make sure please you watch this video and you understand how to work with this report. Scroll a bit lower, you would find a table with the most important recorded webinars that you will be able to find inside the media zone of the Academy. Please make sure to watch them on your convenience. Scrolling lower, you would find the watch list. Basically, what you have to do is to click on the image and it opens for you our trading idea. Okay? A bit below, you will be able to find explanation to our trades. Pretty much straightforward. And also inside the members area, please make sure to go and to watch the video tour so you understand how this members area works in your favor. Here you will be able to find the calendar for the coming events, live trading rooms, meetings, and so on. As for now, it's empty because I record this video as now it's Sunday night here around Toronto. So as I said, it's instead of Monday session. So let's get going. We will go over all the opportunities as they are and prepare our trading plan and the setups. So let's start. So we begin with the European pairs, the euro dollar. We are working with the double cycle from the weekly chart and the expectations of the daily corrective cycle. Daily corrective cycle could be in two waves or could go here in some time for a range. That's the bottom line. Before the market would be able to design its further continuation. Now, according to this double cycle, the target, which is the 38.2, is placed around the 116 area. What do we need to pay attention to? Fundamentally, we get some green light in the previous week when Powell said he showed his confidence of cutting the rates despite the good numbers that keep coming from the US market. As for now, the market anticipate rate cut in the US in the coming meeting. Some places already bet on 0.5% move. Hard to believe. Very likely it will be 25 basic points unless the Fed will surprise and will hold the rates, and then it will be completely against the market's expectations. So the way that currently the fundamental wind blows is anti-dollar movements, and as long as some levels hold, we can look to trade these directions. For the euro dollar, basically we are talking about the most recent low. As long as it holds, the idea is basically looking for the buys. We have the structure here of higher highs, higher lows. We do have a bullish hidden divergence here, so technically as long as we hold, we are after buys. 4-hour chart seems possibly creating here some two waves or some sort of a range here, and if we manage to hold that and break further, good chance that we will see a continuation. So that's for the euro dollar. What are the warning signs we will have to pay attention to? Of course, the most recent low and why it is so critical. Because in the previous visit we got the 61.8 tested and broken, which later on finished as a false breakout, and if it simply crosses below again, this is a big warning sign for the euro dollar. And if it happens, it might be the start of the move towards much lower levels. Too early to judge and expect anything like that. Several levels still have to be broken in order for that to happen. Next one of the euros is the euro versus the pound. The pair is sitting around the critical zone of 0.90 up to 0.91. This zone is a zone of the double cycle we have here and here. The divergence is massive and in play, and basically the idea for us, as long as this area holds, look for retraces down, and that could happen in two waves or some ugly range. Everything is acceptable. The desired direction to trade is bearish. The most recent rising trend line was broken, and basically what we want to see from the pair is some beginning of bearish structure, bearish trend, and to create lower highs, lower lows. The idea for this pair was and remains bearish, and we are looking to sell as long as the area of 0.90, 0.91 holds. Every rally, every bearish evidence should be a good opportunity to look for a sell trade. Next one on the list, which pays us pretty beautifully as expected, was our euro versus the Aussie. The idea of ours was rallies and sell. We got a bearish hidden divergence here in play. Everything started from the convergence that we got on the very top. Alright, retrace up into waves breakout, and we are bearish since then. After cashing out partial, here comes the next opportunity and the next payout. So what's next for this pair? The view was and remains bearish. The weekly chart we are trading is a triple cycle to the upside. We expect double wave correction, so for this pair the plan is for longer term. As long as we go and no signs against us, the idea was and remains bearish. It is unchanged, and we have here running cells, and this remains still. And we have the euro versus the Canadian. With this pair we are also bearish and going good. The final destination for this target looks like it has a room for us. No official signs against, so sell the rallies could be a good plan for this pair. It looks like this one has a room to go. Every rally should be a sell opportunity. I expect this pair to continue lower. So again we have running cells here and no changes. We have it going from the 149 area after we got the structure of lower highs, lower lows, and this should not be changed. So that's what we have for the euro pairs. As for the beginning of the week, nothing really new here, some running positions. We also have a good one building up. This is the euro versus the kiwi. The way I expect this one to behave is to reach one of the critical levels of 61.8 expansion or full 100 expansion, create here a bullish divergence for us and start its bullish journey. We are not there yet, just a preparation for what's to come. A bit early yet, so no trade there yet. That's from the euro pairs and the ones we have to pay attention to. Our next ones would be the pound pairs. So the first one that we have running and running amazingly, it's the pound versus the Aussie. Quick reminder, we are bearish since this moment of the two waves breakout. This is the plan where we are bearish, and this is a great ride for us. What do we expect as per the cycles? We do expect 38.2 at least, which is approximately around the 177, and ideally I move down to 173, which is the 50% of the triple cycle from the weekly. Daily time frame develops the double wave correction. The 61.8 was cleaned completely. Our next level destination for such opportunity is very likely here, same around the 177. Yeah, it could theoretically push slightly lower, and that would take us closer to the 173, which was the 50% from the weekly, and could be 161 expansion of the daily expanded double wave correction. The bottom line with this pair, our sell plan was and remains still running sales unchanged. Pound versus the franc, holding so far its weekly bottom of this consolidation area, dancing around the zone suspiciously, I have to admit. However, the daily last divergence is yet under this pressure as bullish, and the bottom line here is this pair is expected to provide a correction. We also are facing a double cycle here, and the level of 61.8 looks like a real hold. 4-hour chart created for us two false breakouts and higher highs, and since then a clear enough range. This is the most recent consolidation, with this being as a creating divergence, and that's why if we manage to break this area, this pair could gain the momentum. However, because it is refusing to gain the momentum as we expect, and as technically already should have happened, we do need to remember that in such cases the best thing to do is to cut the exposure. That means to reduce the exposure. If, for example, you are trading with, just for example, one lot, cutting 50% of it when it's not developing in the direction as you would expect, or even more, is the right thing to do. You do not want to find yourself fighting the market, praying to the market and trying to convince it that your direction is the right one to move, right? You definitely want to be there to listen to the market. If it moves, great. If it doesn't, it is what it is. Take the step accordingly. So my personal view remains looking for the buys. I myself am still involved with the convergence and the retrace to 50%. But again, when it's not developing, I reduce my exposure and following up to see what's next. And my next is this consolidation area. If we manage to break above that, it's a good sign for the correction to begin. If not, maybe I will go and decide to kill the whole position. That's from the pound pairs, and there is the direct pound dollar exposure, and here is what we face there. This is developing a weekly two waves, bottom of this consolidation with a bullish divergence on the moving averages, and the bottom line here, it was a regular divergence that turns to be kind of bearish convergence under a heavy divergence from the moving averages as it is. The daily cycle provides us the same false breakout, great divergence, which now turns to be fake convergence, but the moving average are still providing a good divergence by itself. The most recent trend line, falling trend line, is the one comes from the daily time frame. You can also fit it in with the 4-hour highs, which you would find here. Break above that would be a good sign that we are ready to start looking for the buys. If it refuses and fails to break, keep it neutral. We will be looking for buy opportunities if we go above the broken trend line. This is the 4-hour chart trend line I was referring to. It fits in perfectly with the daily, so we want to see that climbing higher and then retraces and buys. If that does not happen, we do not go with any position on this one. Okay. Pound cat, pound kiwi, not so obvious, not so clear. Still think pound kiwi has a bit further room to go, like to the 100%, but I prefer to stay neutral here. Don't want to get into too deep exposure on the pound at that moment. So that's for the pounds. Now the Pacifics, we have several pairs running there. The first one was the Australian dollar for us. We are bullish since the break of this trend line. Previous week we got some pullback and continuation. According to the weekly divergence, bullish divergence and the cycle, we should expect the daily to take place as a corrective cycle, meaning this. And this is pretty much what's building up right now. So I do expect the daily to continue and finish its double wave. How deep will that be? It's almost impossible to say right now. It might continue seriously to the upside, or it might make a small move like this and finish. Again, it's too early to judge at that moment. Yet the Aussie dollar remains and maintains bullish view. The next one from the Aussie that we have running is the Australian versus the franc. The idea here is the triple cycle that we are facing from the weekly time frame with its bullish divergence on the moving average of the MACD and the daily time frame that confirmed and verified the last leg from the weekly to be a cycle by itself, this time on the histogram. The trend line was broken, we are bullish since, and the expectations, same story, 2 waves to the upside. First destination and targets would begin from the daily time frame, as this is the most recent cycle we have in play. Triple cycle, so 50% could be a great destination. That this is approximately around the psychological level of 70. If it manages to break through, the next level we will have to pay attention would be 070 150 up to 070 270, which are the 38 and the 50 accordingly from the weekly cycle. The next one on our list for the Aussie as well, we had the Aussie Kiwi previous week, but after it crossed below 61.8, we went neutral. Now we are looking for the new opportunities. And it's very, very interesting one to follow, no doubt. Pay attention, we have the Euro Aussie, Pound Aussie, and Aussie Dollar and Aussie Franc. At that moment, it's more than enough exposure to the Australian. As per the New Zealandian, we have the New Zealandian CAD. So here is what we are facing. We have this double cycle from the daily that came close to 61.8, and same 61.8 also comes in play on this double cycle. First area holds, and we have slightly lower, very serious psychological zone. It's pretty much around the same area. This is a massive bullish divergence with 2 false breakout. Break above this recent trend line could be the one that opens at 2 waves correction. So New Zealandian CAD, from my point of view, we are going for a corrective period. Corrective period could be 2 waves or some sort of a range. This or other way around by retraces should be pretty good plan on this one. Next one on the list for us comes from the cat franc, long-term buy opportunities that derives from the monthly triple cycle and the expectations to see two waves correction to the upside. This long-term opportunity is supported by the weekly. Actually, the weekly supports us by rising swing points. That's pretty much it. But what do we have here is the classical two waves retrace on one lower time frames, which was right here. That's the two bigger view, bullish divergence on the moving average on the bigger view and the shorter view as well, and a break above the most recent trend line where we are bullish since. My expectations, they're looking for the buys. So bullish view, buy retraces is the plan. The retraces could be in two waves which currently building up and breakout and continuation. This could develop a bullish divergence with a good hold that might provide the next buy opportunity as well. So looking for buy setups for the cat franc is my personal view on this one. Dollar Canadian is approaching to its classical 130. I would not be surprised if we are heading towards the 129, to be honest, as we cleaned the 100 level without real bullish momentum gained since then. The only thing we faced was two waves retrace and a hold in this range. Since then, a bearish continuation. So I would not be surprised at all if we will see the dollar Canadian pushing slightly lower before it all changes. At that moment, as for now, I keep my bearish expectations for the dollar CAD as long as we do not have an official reversal to the upside. So for me, dollar CAD should ideally approach towards the 129 area-ish, and we will see. But it looks like holding the momentum. Dollar yen, nothing really clear on my view. And this is pretty much the full list as we have it at the beginning of the week from the Forex view. Now we move to the commodities. We have the gold, where we expect, according to the monthly cycle, to see one final push towards 1460, 1480-ish. So my personal view is this consolidation and expectation to the upside, or we can develop two waves. The idea is still looking for buy opportunities with every retrace that is followed with bullish momentum, such as, for example, little inner divergences like here or like here with trendline breakouts. Of course, remember to apply management. Whatever the strategy you work with, the idea here is retraces, bullish setups, and expectations for one more high. I still think, I might be wrong, but as for now, I believe there's still a bit more to go before it will end. And the next one of the commodities is the natural gas. We have a bullish hold here. Some of you got involved from the very close to the 210 psychological level we wanted to get. Some of you got involved with the trendline breakout. This or other way around, this is a good place and a good setup to go neutral in terms of risk by moving the stop loss to the entry. You do not want to keep yourself exposed to a risk when some signs again start to appear on several time frames. And we have it on daily, we have it on 4 hour, kind of tricky. Best to cash out. And the last one we have running is our coffee. Some of you are involved with the investment after the break of this trend line. Others got involved in the retrace to 98 area and the bullish hidden divergence. Now with risk free, and as explained on previous week, If you are not in invest but in the regular risk management trade, then this could be a good place for partial cash out due to the divergence that comes here after the two waves. Expectations are still bullish. I hold my invest here, looking forward for new opportunities. As per the stocks, there is only one we have invest currently going. This is the Deutsche Bank. There are no new setups involved with this one. Not sure I do want to involve with more stocks at that moment. They are simply not clear, not obvious. Now, I was asked a lot about what's my view on oil. I don't have a view. This is one of these scenarios where I currently really don't have a read. I think that this should become the area where we would be exposed to sells, but I really don't see any clear setups here, guys. So the ideal scenario I would wish to see is this. If that happens, then daily and 4 hour both would become bearish. It would be a good sell place, but does not look ready. So personally, I will keep this as a neutral at that moment. We'll be looking for new, great, exciting opportunities as they will build. As for now, they are not there yet. Last thing to pay attention to for this week, first of all, some dropping news from China. However, industrial production and fixed assets investments still look good and healthy in China. And here we go. We begin with the CPI in New Zealand. We can see the New Zealandian power accordingly. This is as per the very high expectations. Monetary policy from Australia, average earnings in Britain, which is not expected to be changed. And very important thing to pay attention to, the retail sales and the core retail sales in the US, which is expected to drop. Speech from the Federal Reserve Chairman Powell and the FOMC member Evans. CPI from Britain, CPI in Canada. If that goes negative, the chances that Canadian Bank will decide to cut the rate as well would increase. We need to pay attention to this data, because that might be the ending game for the current drop in the dollar CAD. And unemployment changes in Australia, followed by Thursday's retail sales in Britain and Friday in Canada. That is what is expected in the market from the fundamental view this week. Again, it's the beginning of the week. Of course, opportunities might change and develop. As for now, I would keep personally low risk in the chosen trades. When the setups are not obvious, but mainly levels are traded without clear technical setups, it's best to reduce the risk. When the setups become obvious and clear and mainly rhymed and synchronized among several time frames, that's our times to be more aggressive. When this lacks from our watch list, we do not have full clear synchronization, that makes trading aggressive. And when the market become more aggressive, we better become more conservative in our decisions. Remember, we never want to force the market, we want to follow it. Not to trade wishes, trade facts. Very important to remember that, because in times like that, we all want to trade, we all want to get involved. If it's not ready, it's not ready. Don't force it. As simple as that. That's all for today. Thank you very much for watching. I'll be back to you in live meeting on Wednesday. Now I will publish the days and the hours for the week, and that's pretty much it. Thank you very much for watching. I wish you a wonderful trading week. Hopefully the market will provide us some good opportunities. Remember, do not force. Wait for it to happen. Nothing happens if you trade not 10 trades per week, but only 1 or even none. Nothing will happen. It's only in our head and only the pressure we put on ourselves. Thank you very much for watching. I'll see you around in Telegram channels and of course in our next meeting live. Thank you guys. Yours, Vladimir.